Hi, Woody Henderson here with American Dreams Real Estate, and it's that time again, time for the September 2021 San Diego housing market update. Let me share my screen with you. Excited to share my screen with you. All right, so this month we're going to talk about San Diego's key metrics, as always, talk about the median sale price and what's happened in the last month. I'm going to take a look at, is this market shifting? Talk about mortgage rates. I also have added a slide on renting and have some information to share with you around that. And then I'll finish up with a summary and a forecast. So San Diego key metrics. For the first month in many months, we saw a decrease in the median sale price down to 730. Although we're down $20,000 from the previous month, we're still up 13% from the same time period last year. Market time is up slightly to 20 days. The month supply is down slightly to 1 month worth of inventory, but that's down 52% from where it was last year. Number of active listings is at 3,500. That's down 42.8% from last year. And the number of sales, 3,699, is on par for where it was last year. So after months of record high prices, the median home price actually dropped in August. Let's take a closer look at the median sale price. As you can see, in August of 2020, that was 645. In August of 2021, that's up to 730. Does this mean we're having a market shift? We've had one month of decreasing prices. I don't think so. Let me share with you the median home price trend here. So the red dots are the points on the graph that correlate to December of each year. And so what we have seen historically is in December, prices will hit a low point, and then they will start to come back up until they peak in July or August of each year. And that happens year after year. The gains were bigger in the last 2 years. You can see that the difference between the last two red dots are larger, so prices accelerated over that time. But in general, this is the cyclical nature of real estate here in San Diego. I also wanted to add this slide, the median price to list price, just to talk about how hot this market still is. We've had homes have been selling for more than their asking price ever since January on average. And from a listing agent perspective for my listings, and from a buyer's agent perspective for the people that I'm helping buy, it's very competitive out there, and we're still seeing multiple offers and bidding wars for those homes that are priced appropriately in this market. Let's take a look at interest rates. You can see that interest rates all the way back to the 70s, 8.86% in the 12% the following decade. Where we are today is my clients are getting interest rates of 2.75 to 3.5% in general. So interest rates are very historically low, and that's driving a lot of buyers into the market and helping to push home prices up. The mortgage rate forecast, well, mortgage rates are forecast to go up by just all of these experts. So what does that mean? Your monthly payment, if you wait to buy till next year, your monthly payment is going to go up, and we're likely to see prices continue to increase as well. I wanted to show you a slide. This is from the Census Bureau on the national level on what's been happening with rents over the long term. You can see that back in around 2009, in the center of the graph, rents were around $700 per month. Well, now the median rent is up to $1,228. You would be hard pressed to find anything in San Diego at that price, by the way. But the point here is that rents will continue to rise over time. Whereas if you're purchasing a home and you're using a fixed rate loan, you're locking in that payment for as long as you own the home and for as long as you hold that mortgage. So is it better to rent than buy? If keeping your costs constant is important to you, you'd be better off buying. All right. So in summary, the median home price dropped in August. Inventory is still historically low. Homes are selling above asking, and there's a lot of competition. There are more buyers than sellers in the market, and interest rates are historically low and forecast to increase. I think these conditions will continue to put upward pressure on prices in the next year. So here's a little wrap up from the deputy chief economist at First American. On the national level, they're seeing some signs of softening, but context is important here. We're still very much in a seller's market. So now available are our fall buyer and seller guides. And if you're interested in one of those, just reach out to me. Happy to deliver. And by the way, if you're watching this on YouTube, please subscribe to my channel. I would greatly appreciate that. Until next month, talk to you soon.